Welcome back to the Uncontested Investing Studio for another episode. I'm your host, Nate Zielinski, joined today by co-host Suzanne Andreessen, and we have a jam-packed episode for you today. We're going to get right into it. We're going to talk about market cycles. We don't have all the answers, but we want to give investors a leg up on their competition. We're going to talk about when to buy, and then we'll go into a conversation about local versus out-of-state markets, what investors should be targeting in each, some pros and cons. Suzanne, I think we got to start though. When is the quote unquote right time to buy for our investors?
Well, it's a loaded question that varies in every
Yep.
market. You could have a market that, and you may know, it depends upon. I'll say what your goal is.
Mhm.
If you're doing a fix and flip versus a buy and hold, those are going to be two different elements as well. Certainly, there's a shortage of rentals, I think, in every market. But sometimes, focusing in your own backyard is the best place to start because you're most familiar.
Yep. And it's not honestly kind of a trick question. So I'm sorry I set you up a little bit
It's
as you
thing in
as,
the
we're-
morning.
as
You're
your
good.
co-host. I know, right? Because investors that are savvy enough and that do the work and the due diligence, they can find good deals in any market. There are some key indicators that we can talk about as well. But I think, right, if there's a market in recovery, that's when you want to gravitate towards those fix and flips, right? There's a lot of houses that are under market value, underappreciated, maybe have, sat vacant for a while, and it's prime for an investor to come in at a low price, put the work in and put it back on the market. And then you have on the opposite end of the spectrum, there's other times like recessions where everybody's fearful, nobody wants to touch anything, and that's when the investors really step in, scoop up all the properties, expand their portfolio. So, and there's a few markets in between that I think are worth discussing too.
So I think, wait, if you look at, you touch on a topic of, going in there and making the renovations, but those that have sat vacant for a while are going to, require probably a little bit more, so that's, part of that decision factor is going to be how much cash do I have to renovate,
Yeah.
to bring that back to market. And then with that, will it provide the right return for the rental strategy after that?
Yep.
So those are the things, you have to, really evaluate that and know and if you've got some vacancies, that in itself, is your rent rate may be a little bit lower. But if you have a high demand for rental, you can splurge a little on the price tag and see if you can get that return up.
Yep. We discussed it in last week's episode when we're talking about emerging markets. There definitely is times when markets are experiencing some expansion. That's where you can get on that cash flow and appreciation wave. You do have to be careful though, because it can become sort of a tipping scale where you get over leveraged and get a little ahead of your skis. So there is that fine margin. It's not always going to be smooth sailing when markets are expanding. You really have to know when to cut off that valve and really focus on the properties that are in your portfolio at that point.
You do, and you have to, this is a very competitive industry. So you have to be ready to go when you see a property,
Yes.
and a lot of that is doing your homework in advance. Something we talked about in other episodes, having your financing lined up,
Mm.
having your, and certainly in your local market, you'll have your partners to work with.
Yes.
And that's a
Yep.
key piece to expediting the whole process and getting completing perhaps in advance of your schedule.
And having that buy box and sticking to it, I think, goes hand in hand with that, right? You really want to have a plan. You're not just throwing pins at a neighborhood dartboard and selecting houses based off that, right? You really want to make sure that the house makes sense. Yes, it can be that shiny new house on the end of the street, but if it's going to over leverage you, make the margins tight, maybe it's not the best fit for you. So zoning in on that buy box before you're making these decisions is a huge thing to remember for investors.
Well, and share that buybacks with your, pick one or two agents that are, have a collaborative strategy with you that are only focused on you,
Yeah.
that they're not, sharing their process with another investor in the market. If you can find one or two of those agents in your local market and really, create a team and atmosphere, they'll be the ones that tell you when a house is, hitting, when it hits the market, when there's a coming soon, and really create that engagement with your local partnership.
Yeah, and I think it's taking it a step farther. You touched on talking to your lender. I think that's an important thing to do. But what you're also going to want to do is be able to have those expectations of what exactly everything is going to cost. It's one thing to know you have funding lined up and you have a relationship with a trusted financing partner, but knowing every little detail of that deal is possible. It's out there for investors. And, before they're signing on any documents, they're knowing exactly what they're paying for what. Things are subject to change a little bit here and there, but it's good to be in the ballpark and have it be a very small ballpark and be confident moving forward.
Well, and having, a partnership even with your local contractors,
Yeah.
where they can come in and say, okay, this is I can refinish these hardwood floors. These have to be replaced. I can, it's just, and then they're also, you want to know what they have access to,
Mhm.
what products are going to be readily available in the market. We've certainly seen shortfalls of available inventory. And I think you need to, and have the partner who you can trust from a contractor who knows is not going to bake in more than their fair share of profit as well.
Yep. And we're going to have a conversation about local markets versus out of state markets a little later on in the episode. But I think there's, a few indicators that investors really should dial in on, no matter the market, right? Whether it's in their backyard or across the country. You're talking about vacancy rates, rent growth, days on market, and then building permits and construction projects. So if you're looking up those statistics in any given market, that'll kind of be the indicators of, okay, where is this market at? Is it slowing down? Is it speeding up? How aggressive do I need to be? And then within that, what houses and properties fit my buy box and what neighborhoods should I be looking at? From there, you can really come up with a solid plan, and attack the market confidently.
Well, and no, the days on market is a huge indicator as well as I'll say negotiation
Yes.
strategies. The longer it's on the market, the better chances you are on securing that at a better price
Mhm.
point. But also, there's a piece that you want to pay attention to, and this is again when you're partnering with your real estate agents, is when a market comes back on, when a
Yeah.
product comes back on the market, that indicates a couple of things. Either the first buyer didn't qualify,
Mhm.
or there were bigger renovations necessary
Yeah.
than they were prepared to do. That doesn't scare off most of the investors. So if you can, get in front of that initial, I'll say, owner occupied
Yep.
strategy, pay. But these are the things that you really want to be, pay attention to, and partnering with your realtor. They'll be, hey, Nate, this house came back on. I know we talked about it,
Yep.
but I think we need to jump on it today.
Yep. And that's, perfect segue back to, a full loop conversation of having partners in the local area, general contractors on speed dial, local realtors. It all goes hand in hand, and you can help an investor make the best decision for them because, they can feel like they've lost out on a property, forget about it, try to move on to the next one, pick up the phone a week later, and the property that they fell in love with is back on the market. So
And it's a great strategy.
yeah.
It was a great opportunity to get in front of something like you said. But you fell in love with it. But there's the problem with that also is emotion.
Yep.
It's really difficult to keep emotion out of some of these transactions. You want to almost stick with a gut feel
Yep.
versus the love of a
Yep.
product.
And that's why the buy box is always going to be your saving grace, right? It's always that last check, no matter how good the property is, what the potential for it could be. Is the work too much? Is the work too little? Does it fit the buy box? Should be kind of that investor's guide to success, and they should carry that with them. They might have to build a few, which is an important thing to remember as well. Every market is not created equally, so there might be a different buy box depending on the market that you're going to. So keep that in mind. What works in Connecticut is not going to work in California. So another thing for investors to remember there.
Well, and having your pipeline full. You
Mhm.
need to have more than one going at any given time.
Yeah.
But don't have too many because all of a sudden when all three come available, you're gonna have to pick and choose which one really matters most.
So we're after a great start discussing the market cycles, when to buy, and up next is going to be local versus out of state. Stay tuned for this great episode of Uncontested Investing.
See you soon. REI Inc. is the premier monthly publication for real estate investors. Dive into a wealth of expert insight and strategies from industry leaders and gain valuable regional market insights, ensuring you always have the best information at your fingertips. Visit rei-ink.com to elevate your real estate investment game today.
Welcome back to this week's episode of Uncontested Investing, where Suzanne Andreessen and myself, Nate Zielinski, are going to discuss local markets versus out-of-state markets, what investors should know about each, how should they approach them, and kind of when is it time to make that jump, right, from being a local player to going across state lines, to across the country, so on and so forth. So investing in your local market, what are some of the bonuses investors can expect when they're doing that, Suzanne?
So, knowing your own backyard is probably the easiest strategy for you to master. If you have not, you'll know, where are the shortage of rentals.
Hmm.
That's going to what is the need for those, and how quick are they turning? And because a lot of times, and I've been in real estate and have a broker's license. You always hear you're always getting, hey, does anyone know about a rental? So there's always people
Yep.
asking for these. What houses are available. Having that knowledge will help. make that decision a little bit easier for you, knowing that you've got a product that is actively, ready for renting, and maybe perhaps can then garner a little bit higher rental
Yep.
price tag as well.
And I think the important thing that we discuss almost every episode is networking and partnerships. Those are much easier to build at a local level. You start gaining that trust with contractors, with realtors, with other industry professionals. We've talked about local RIAs a few times on this show. So there are a lot of different ways for an investor to tap in locally, start those partnerships, and really kind of divide and conquer responsibilities when they know they have trusted partners that have the same goal as them, is try to make money on the next investment deal. And that investment deal is hopefully going into your portfolio.
And you may also want to work with some of the local small business associations, or even some of the companies that may be in or moving to your neighborhood. For example, Bath Iron Works in Maine has a shortage of housing for the workers. They wanted to hire 3,000 folks and just don't have the housing for that. So if you know a company like that in advance, reach out to their HR department. Say, hey, I'm looking at acquiring a couple properties. One, what do you think the price tag is, and the tolerance for your employees? What are they looking for that could help make some decisions? Maybe you do a 4 unit instead of a 1 unit to get a lower price tag per unit, but bring 4 units to the market.
And investors operating locally can know the markets as well. They drive through these neighborhoods, they see a for sale sign, they can jump on it very quickly. And not only that, I imagine there is an element of a little nervous tension maybe, or being a little bit hesitant when an investor first starts. So being able to have control over the process, right? You're walking through the property, doing the inspections, analyzing what type of work needs to be done. It's one thing to see it online, but to actually go to the property, check every nook and cranny, and be able to have that confidence as an investor that you can move forward with this property. That's hard to replace, that sense of confidence of like, okay, I've seen the property, I know what I'm getting myself into.
And something for an investor starting out, I think a 2 or 4 family is a great way to
Yeah.
hedge your bet. And you can tolerate, a 25% vacancy in that and really not have a hiccup.
Yeah.
And it gives you a chance to also address an immediate need in the market that you may know more than some of the other markets surrounding it.
Yep, yep. And you may know the best place to find tenants. You know the best ways to market your properties if there is a vacancy in one of those units. So those will always help an investor keep that property full. If there is a vacancy, it'll be a limited amount of time type of thing. I think having that control and kind of being in that controlled environment as an investor, it's a great way to get your feet in the door and get started in the industry, and really gain that confidence, have that rinse and repeat mentality of like, okay, the first couple were a little nerve wracking, but now I'm on my third, fourth, fifth property, and I feel like I'm, catching my stride, hitting a groove, so to speak.
Well, and once you get your sea legs, it allows you also to, um, being the local investor, you can respond more quickly.
Hmm.
If there's a toilet that's clogged or whatever it is, or things that you're trying to handle quickly, that can help you especially if you're doing your own property management.
Yes.
You want to react as quickly as you can, and the best way for you to start out is really to maintain that local strategy.
Yeah. There are some downsides to local as well. It's not always perfect for investors. I think where they are is probably the biggest determining factor. Are they in a competitive market? Sometimes you get a little unlucky, and your local market is great for investment properties. You already have industry professionals that have staked their claims and made roots in your local market. So it can be a little rocky to start. That also could be a pro, and you could use those investors to help you as you progress in your career. But getting that foot in the door gets a lot harder if there's already investors succeeding in your local market.
And we touched on this a little earlier, but you also tend to be a little bit more emotional.
Yes.
And when it's in your backyard, you can't help but want your own neighborhood to be very
Yep.
successful, and that can certainly cloud your judgment.
Yeah, it actually can work as a negative as well if you know the neighborhoods too well, and you have this bias built up in your mind of, oh, I would never want to live there. Then you may be cutting off a few neighborhoods that could actually be pretty profitable if you gave it a chance and did the research and looked at the numbers. But if you just have a judgment on a certain spot based on where you live, you may never get to go down some of those streets and check out the opportunities.
Sure, sure, absolutely, and it's probably the biggest thing I would say, recommend that you try to avoid is emotion
Yes.
in any part of the transaction.
Yep. Yep. And I think too, with that, it's kind of limiting diversification depending on where you are locally. Are there only opportunities for 30-year rentals? Are there really only opportunities for fix and flip? And you need to find tenants once you're done completing that work. If you're holding on to the property for the burst strategy, that is. So there are some limitations to investing locally, but I think the pros outweigh the cons, right? It's a great way for investors to get started and really figure out if this is a career that they want to go down.
Sure. I agree with that.
Yep. So moving to the out of state markets, right? A little bit more nerve wracking as they go along with the process, but you do have access to more affordable markets, right? We just talked about maybe your local market is overpriced and you're just not ready to be that competitive. You can really pick and choose your markets at an out of state level and go towards what is exactly the best place to start for me, my funds, my vision, my goals, and then go from there.
And we touched on this a couple episodes ago on finding a unique component to a market. Everyone knows that Atlanta's a hot market. Macon, Georgia's a sleeper city. How can you engage in a market like Macon or any city that surrounds a military base? So do your homework, but find something that if you're looking for, and I know we're going to touch on this a little bit in this episode on a cap rate. But if you find the lower housing rates tend to have a higher cap rate when you're looking at that, but because they tend to be a little bit more risky.
Yep.
You're on the perimeter of the city versus being in it, but it certainly can provide a better return.
Yeah, and it's the ability to invest where the numbers make sense. And I think that's one thing that's important for investors to hear and be able to be tapped into on a national level. There's nothing wrong with having a local lender, having someone you trust when you're talking about initial transactions, funding those deals. But if you really want a whole scope of the picture, you want to work with people that are working nationally, right? They can be tapped into those markets, give you advice, tell you what's hot, what's not, what property types they should be looking at. That doesn't always come from a lender, but if there are other industry professionals that on a national scale, that's what you want to tap into them for. But where else should I be looking, right? I've been pretty successful where I am, the state I live in, the state I grew up in, whatever the case may be. Where else can I go? What's next for me?
Well, and how many times we heard, growing up, don't put all your eggs in one basket.
Mhm.
Balancing your portfolio is certainly a key to success.
Yep.
And when you look at, you could have 20% or 30% of your portfolio in a particular market, and all of a sudden a larger business closes.
Yep.
And now you lose, that rental strategy. So if you've got a subsequent city and or state that you can, balance that, hiccup until you figure out what the next step is, it's certainly a way to guarantee survival.
It really allows for strategic diversification, right? You can pick and choose which markets you want to operate in, which property types within those markets you want to go after, and you can really set yourself up for success. Maybe some parts of the country, the burst strategy really works. You're taking these lower valued properties, putting in the rehab and reselling them. Or finding tenants for them. Sometimes a short-term vacation rental is perfect for a certain market. So if you're doing the homework and you're really prepared, you can tap into markets all across the country with different strategies and find so much success.
And we talked about this also previously is migrations plans.
Mhm.
Study some of the migration and, just because people are migrating from a location doesn't mean it's a bad location. That actually is going to really drop the value on the houses and allow you to come in and potentially to sweep some of those up. And instead of being a commercial engagement or working to support an industry in commerce, maybe you transition those to college rentals.
Yes.
So as the markets shift and you see some gain and loss in migration patterns, figure out how you can use that to your benefit.
I think the moral of the story is the opportunities are endless if you're willing to broaden your horizons and invest out of state nationally. You can really hone in on certain markets and succeed. Uh, as we mentioned, though, on investing locally, one of the pros is you're able to forge those relationships with industry professionals. You're building that trust. It's a little harder to do out of state. You're really taking a leap of faith with some of these property management companies, contractors, and agents, right? It takes a while to build that trust. Uh, how do you see that? Is that something that investors struggle with?
Well, so there's I'm going to talk about two things that we've had in previous episodes. One, and I think we talked about earlier, like working with the National Rental Home Council.
Hmm.
You get to attend a convention like that, and at that venue, we had a conversation with um, Kelly from Property Masters. So now you've got someone who, and she shared with us that she was expanding to 3 different markets.
Yeah.
So as you grow into another market, you have the opportunity perhaps from attending some of these events for the national area who's a property management company or who's a construction company
Yeah.
that's in that
Mhm.
market that can help you with the renovation. If you've worked with them here, and maybe that's a conversation you have with your current contractor if they play on a national scale, where should I go? Where are you working?
Mhm.
And what are you seeing? Because they can certainly manage the contracting and renovation for you elsewhere.
Yep. And I think another con worth discussing for investing in out of state markets is an investor's favorite word, a surprise. So if something goes wrong at one of your properties, if you're local, you can pick up the phone or drive down the street, check out the problem, and you're able to talk. Even if you can't fix it that day, you're able to talk to your tenant face to face and say, "Hey, I've got somebody that's going to come first thing tomorrow morning. We're going to get this straightened out." Or you can pick up the phone and call your general contractor, say, "Hey, something went wrong. There's a toilet leak at one of my properties," and they drive over and it's fixed within a few hours. When you're talking about out of state, now you're worried about, am I going to catch this person at the right time? Can I get them on the phone? My tenant is kind of on the verge of a freak out, and rightly so, if something's going wrong at their property. But that can be a few more hurdles to fix something, small that goes wrong at one of your properties. If you're a few states away, that becomes a little bit more of a headache for you.
Because air conditioners and refrigerators never break in August,
Yes,
especially in Phoenix.
exactly.
So, so if you understand what's out there, and I know we've seen it at some of the national trade shows, they've got standalone cooling
Mm.
units that you can, bring to, certainly if you're in the Arizona markets or Florida markets when you've got high heat in the summer months, have a plan. Do you have a sizable cooler that you can put ice in and bring to your tenant so they can take the stuff in the refrigerator and keep it cool. So have a backup plan and something, and let your tenants know, I'm here with you. How can we work through this together? But have a plan in the back of your mind on how you can solve any of these on the
For
horizon.
sure. Yeah, and then I think the last thing worth talking about when we're discussing investing out of state and potential downsides, we've traveled a lot, Suzanne. We've been to many different states. You probably a little bit more than me, but I think in some of these cities we go to, when you talk about a street by street difference, not having that local knowledge can really hurt an investor if they're not in that city doing the research, actually taking the time to go out and scope out some properties, because you can see a very stark contrast. You're driving along, the houses are beautiful. You feel like you're in a budding downtown metro right outside of a city. And the next thing you know, you kind of are like, okay, where the heck am I? The street lights start to disappear. The property values dwindle a little bit. So if you aren't tapped into that local market and you don't see that street by street difference, that can really hurt you as an investor.
Well, there's things you can do though. You go to a local eatery, something that's kind of you feel is in the hub,
Yep.
and sit at the counter. Don't sit
Yeah.
at a table, and hear people talking and ask a couple questions, and figure out who's the local chamber of commerce. How can you, what do you know about some businesses that are moving here? How can I help support your local chamber of commerce? They would love to partner with you on that and educate you as to where they feel is opportunity zones.
For sure.
And opportunity zones can be large or small,
Yeah.
and that's something you should focus
Yeah,
on.
that's a great point. And with all these downsides, there's savvy ways to kind of navigate them, but we'd be remiss if we didn't discuss them with investors. So that is a great point. And I think we've discussed both at length. So the next topic we want to talk about is how investors choose what's right for them. And I think that just takes a simple look in the mirror, right? If you're an investor, you really should know what is right for me. What's my next step? What's my goal at the end of the day? Do I want cash flow? Do I want appreciation? Is it a mixture of both? Because you really have to have your goals aligned, and then you can start making decisions on properties.
And that can be an asset by asset,
Mm.
decision as well.
Yep.
As you're starting out, you're looking to, maintain your cash flow, and then you can hone that as to whether you want a higher cap rate.
Yep.
So you can travel down that path and figure out what's going to keep you most comfortable.
I think another question worth asking while you're looking at yourself in the mirror is, do I want to be hands on or hands off, right? That can be a big factor in should you be in your local market? Should you be at least a 30 to an hour drive away from any property in your portfolio? Are you okay with being in a different time zone as some of your rental investment properties, right? Hands on approach, fixing everything yourself, handling disputes with tenants if they come up.
Never happen.
Yeah, okay. Yeah, I forgot we're living in the perfect world. But or do you wanna be hands off, right? Do you wanna set it and forget it? Hire people that, you have a good relationship with, that have a good reputation, maybe in a different state, and just say, "You know what? I feel safe about what they're gonna be able to do for my property," and be a little bit more hands off.
And there's a couple of things you can do, and it's harder on, as the assets are a little bit older than some others,
Yeah.
we haven't really talked about this at all. um, you can get a home warranty
Yeah.
on any of your assets once they're completed, and that's some things that will actually help plan for the what ifs. So there's a lot of home warranty companies out there that will, if you've got a new heating system or new appliances, they will actually insure those for you. So if something happens, that'll help on the replacement as well.
Yep. Yep. And then choosing what's right for them. I think we can finish this conversation with, do they already live in a market that supports their goals, right? I think investors can get caught up in what's hot now. What are the most successful people doing? What are the people doing that I recently went to a trade show. What was everybody doing? I need to be the copycat and follow their mode to success. Sometimes the success is in your own backyard without even, doing the research, right? You don't need to go down to Florida or Texas or Georgia or California to find that success. It can be in Ohio. It can be in Pennsylvania, right? It can be in Missouri. You just have to kind of do your research, find the properties and the areas that are seeing the biggest returns and allowing investors to be successful, and then attack there.
And we talked a lot in some of the previous episodes a lot about mobile home parks are a significant opportunity.
Yeah.
Working with the elderly community, 55 and older. Find the niche
Yep.
that I'll say sings to you, and then figure out how to develop that. And not only will or even working with the veterans or stuff like that, you're going to find something that if you find your focus,
Mhm.
I think it'll be more rewarding when you achieve that as well.
Yeah. And at the end of the day, if an investor can do a blend of each of these strategies, I think those are the ones that are setting themselves up for success, right? It's mastering that local, being able to get properties in your portfolio, having that cash on hand to be able to be a little bit more aggressive when you're going out of state and finding those different properties in different markets. But gaining that experience locally, you really can't replace that. And then that will allow you to be more confident when you move on.
And figure out what your threshold for pain is.
Yeah.
And figure, and there's going to be a level there somewhere. And just make a commitment to yourself that you won't cross it.
Yep. And there's always room for partnerships, right? An investor that's kind of on the same plane as you are. You see them being successful in a different market across the country. You say, hey, I'm doing something similar to what you're doing, but in my backyard. Can we join forces? Can we go after, bigger properties in your market and vice versa? I have expertise that I can lend you where I am. You can do the same for me. And it's a win-win situation, right? You're each keeping your own separate portfolios that you've built locally. But then as you're expanding your horizons, now you're pooling with other people, you're mitigating your risk too, which never hurts as an investor. So finding that partner could be a huge way to win nationally.
As long as you trust them.
Yep. There's always myths to bust as well. And when we're talking about investors, are they a little bit too nervous? Are they getting all the right information? Are they going to the right spots for it? Out of state investing is too risky, right? But if you have the system in place, if you have the partner in place, if you have your buy box, no investment is too risky if you've done the due diligence and you know it's going to be set up for success. Anything can be risky if you don't take the time to look at it and do your research, but it's the investors that take that time beforehand that know, okay, I've literally checked every box. This is going to be a successful investment. Obviously, mistakes can happen. There can be setbacks, but if everything goes according to plan and I have a tenant in place or the rehab component goes well, I'm really looking at a winner here.
And you replicate your strategy. So let's say you do focus in this one town on a military engagement. You could, find the word military and replace it with manufacturing
Mhm.
and take that to another city. We've seen a lot of, car manufacturing go out to Texas. So you could find a way to master that and almost, replicate that same strategy that you had supporting a military base.
I think another myth that is worth talking about is you have to see the property in person. With the unfortunate events of COVID, the rise of AI and technology, I think over the last 5 years, a lot of closings have become virtual. A lot of investors, it's probably scary the first time you go through it. So you're going to make sure you want to do it with a trusted person. You're closing that first deal. And if it doesn't go off without a hitch, okay, you take that sigh of relief and then you have that confidence to do it again, right? So I'm not saying that it's not nerve wracking. It's not for everybody, but that option to close virtually is out there. And so many people have done it already countless times across the country.
And we've talked about having your real estate partners. One of the benefits of maybe choosing, a national real estate brand. We had Exit Realty and Tammy Bunnell here earlier. And you've got Remax and Caldwell Banker and all the other brands that are out there. maybe you partner with that and then say, okay, I need my exit realty agent over in this market versus what you have in the other market. So you then have that security net already established in a market that you're completely unfamiliar with, and with a real estate agent you've never worked with.
Yeah. Yeah. The last myth we want to discuss with our audience today, that local investing is always better. You hear a lot of people that find that success in their backyard. They swear by it, but it's not a one size fits all. We talked about it earlier in the episode. If that market already has a lot of competition, if it's oversaturated, if there's not a demand for investment properties and people looking for that housing solution in your market, then you have no choice but to not invest locally. So, yes, it works for some people, but it's not the best option for everybody.
And true, and I think, if you can develop your comfort level, and I always think you should, I'm a fan of high risk, high reward, but you have to figure out if you can tolerate that,
Hmm.
and challenge yourself to go to a different market, but do your research and find out what industry is there to support it. If it's a new school opening up, if it's a new hospital where they need, CNA and nursing staff,
Hmm.
is it, where you need teachers? Figure out what's evolving in a market and find a way to answer that need.
Yeah, I think that just about covers it, Suzanne. Who needs a guest, right? I think we
Well, good.
I think we crushed that assignment. So market cycles, when to buy, when to choose between investing locally and nationally. Comprehensive conversation, Suzanne. Thank you so much. I'm Nate Zielinski for Suzanne Andreessen. We want to thank our uncontested investing audience, and we will see you guys next week for another awesome episode.
See you soon.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook, and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.